Jim Wyckoff is back. We'll be getting his thoughts on the gold market. Technically Speaking is coming up. So nice to be reunited with you, Jim. Welcome back.
So good to see you, Daniela, and hello to everyone else out there.
Jim, I know our viewers are happy that you're back and happy to get your thoughts on the gold market right now. Are we still seeing the summer doldrums, however?
Daniela, for the past several weeks, both gold and silver have been trapped in a sideways trading range on the charts, and there's just not much new. I'll give you some support and resistance levels that basically define these ranges. In December gold, you've got solid technical resistance at the June high of 1646.40, and you've got solid technical support at the July low of 1559.50. In the silver market, we're talking about September silver here, solid resistance at the July high of 28.44.5, got solid support at the June low of 26.10.5, and those are levels that we talked about a few weeks ago.
So, Jim, earlier in the week, we saw two billionaires, Paulson and Soros, increase their stakes in the gold market, buying more shares of the Spider Gold Trust. Would this have an impact on the price of gold?
Daniela, I did not see a perceived impact on the price of gold when that news came out. However, it underscores that the so-called smart money in the marketplace still wants to be buying gold.
Right, but the message behind the move is almost bigger there, right, Jim?
Right. I mean, those two guys historically have been on the right side of the market, and it looks like they waited for gold prices to back off so they could do a little bargain hunting.
So today, Thursday, Jim, World Gold Council also putting out their report on the gold market. Any surprises you saw there?
Well, we did see overall gold demand worldwide back off a little bit. That's not surprising. However, the thing that stuck in my mind and kind of was significant for me, and I think would be significant for anybody that's holding gold as a store of value, is that the central banks of the world collectively significantly increased their gold holdings from levels seen a year ago. The World Bank Council said, and I agree, that just really shows that gold remains a store of value during times of keener uncertainty in the world and in the marketplace.
Okay, Jim, let's look at your ratings for gold and silver this week based on your Wyckoff market rating system.
Not much has changed, Daniela. Just right a 5 rating for gold, which means we're in that choppy trading range, sideways trading range. The direction in which we break out of that trading range is going to be very likely the next solid trending price move. And but right now, choppy and sideways, and basically a neutral rating for the Wyckoff's market rating. Now, silver also trapped in a sideways and choppy range. I give silver a 4.5. That's just very slightly bearish because that market had been in a downtrend. It has not shown the strength that gold has in recent weeks on upside moves. So silver choppy and sideways and a 4.5 rating.
Jim, how is the U.S. dollar impacting gold right now?
Well, just today, the gold market rallied about $12 quickly as the U.S. dollar index sold off. And if we see any continued or sustained weakness in the dollar index, that's certainly going to be bullish for gold and silver.
So any other key economic data we should be paying attention to that's coming up, Jim?
Well, yeah, I'm glad you asked that, Daniela. Many in the marketplace, and I think the reason you're seeing the sideways and choppy action, not only in gold and silver, but in other markets also, is that the marketplace is awaiting fresh clues on QE3, quantitative easing from the U.S. Federal Reserve. We've got 2 key events coming up in August and September. We've got the late August Fed gathering in Jackson Hole, Wyoming. The past years have seen some significant announcements coming from Fed Chairman Bernanke at that meeting. So traders are thinking at this meeting there may be some fresh announcement on QE3. Right after that Jackson Hole meeting in mid-September comes the next FOMC meeting. So it's also suspected that meeting may provide some kind of an announcement.
Earlier in the week, Jim, we also saw Goldman Sachs report that the chances of a QE3 by end of year are highly unlikely. What are your thoughts on that?
I don't agree with that. You know, we did see some positive retail sales data coming out earlier this week. Here's the important thing. We are in the summertime doldrums right now. We're not getting any fresh news coming out of Europe because they're on vacation, basically. And once Europe gets back from vacation, once the U.S. Labor Day holiday is over with, I think you're going to start seeing headline risk again coming out of the European Union. And that's going to maybe rattle investors and traders a little bit. So I think QE3 is still on the table. I'm not saying it's 100% certainty, but I would not bet against it.
Jim, thanks for your thoughts today. We'll see you next week.
Can't wait till next time, Daniela. Bye-bye.
Thanks for watching this edition of Technically Speaking. You can email us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.